What's going on? What's going on? We are now in myth five. So you guys are moving along with this pretty easily, aren't you? Now, let's get into it. So, should you buy companies based on the products you like? So, if you like Nike, if you like Apple, if you like Google, if you like, sometimes common sense can lead you to buying good companies. But let's just say you like Clorox, or let's just say you like Roku, or let's just say you like Peloton bikes, or let's just say you like the platform Zoom Video. Now we're getting into where, you know, you should look and dive deep into what these companies are doing if they're profitable. So if you see in the book, it says number one, I asked you to ask this question: are they profitable? Correct. So number one asks, are they profitable? So what we're going to do is we're going to stream, correct? We're going to share screen, and we're going to start looking to see, because I know what you're going to ask, Aristotle, how do I even see if a company is profitable? Cool. So what we're going to do is we're going to go to Yahoo Finance, right? Yahoo Finance. And what we're going to do is we're going to literally type in the company we like. So let's just say it is Zoom Video, right? So we love Zoom Video. Now, for one, what you're going to do is you're going to also ask, do they have an economic moat or advantage in their industry? And you're going to ask number three, are they at a significant drop from the 52-week high? And you're going to ask yourself, does the stock have good average daily volume? Correct. But here's my favorite. I need to know, for one, Zoom. So ZM, Zoom Video. So number one, let's take off all of these indicators. Number one was, are they profitable? We can keep this one up because this one doesn't bother anyone. Cool. So if you look at it, right, Zoom Video is what? At the peak, this was a long time ago. This was 2020. So they are definitely at a significant drop from their 52-week high. So they're back near IPO lows, dang near IPO lows, right? So that for one is an indicator. Now, are they profitable? We got to go to Yahoo Finance and check that out. ZM. So you got to remember, why did they blast off in 2020? Because everyone had to stay at home and they blasted off, correct? So ZM, Zoom Video, they blasted off during a time period. So you also got to ask yourself, is this the right time to buy this stock? And am I in a bubble? You got to ask yourself that too. Is this stock, am I investing in something that is going to last forever, or is it a bubble? And Zoom was clearly a profitable bubble, as you can see, because they went up during COVID. And then as soon as they sent everybody back home towards the end of the year, they started to fall. When everyone came back home and when people were back at school, back at the job, Zoom Video just declined for the last 2 years and could never get back to these profitable moments. But at this time, maybe you would have thought this was the best investment since sliced bread, not knowing, why you're even in it and why this thing is zooming. Think about it. This thing went to 500, almost $600, and now it's back at 88. So let's go look at their balance sheet. So we're at Zoom Video. And when you click on the stock, so remember, I searched Zoom at first. We can do it again if you want to. Zoom Video. And we're here. And then what you're going to go to is their financials. And then we're going to go to, we're at quarterly, and we're looking at their income statements. Now, how do you figure out somebody's profitable? Net income. So Zoom Video is profitable, and they have a year over year return of investment. So net income, this is for annually, this is annually, right? We're on annually. So net income 2019. So honestly, they're profitable. I do see hedge funds picking them up, like Art Innovations. She's been picking them up, Kathy Woods. So yep, Zoom Video. It's profitable year over year, but we need to go in and analyze a little bit deeper. So net income. quarterly. So this is in the thousands. So these guys are making tons of money. Let's go back, and they're only going to let us go back 2 years, but we can expand. So for the last couple quarters, they have been profitable. They've been going down in profit a little bit in these last quarters. Are they a great investment here at the lows? They might not get to COVID lows, but then you got to go and do more research. Do they have an economic moat? Okay, so are there other players? I'm using a streaming platform right now that's their competition, which is StreamYard Pro. So if you ask me, hey, do they have an economic moat? You know, Microsoft has competition with Zoom, and you never know what else will come out. Twitch could be a substitute for reasons why people wouldn't use Zoom video. And Zoom is mainly for working PowerPoint. So would I invest into it long term? Probably not, because I see so many different online players in the metaverse said they were going to come up with a workforce environment too. So you got to think Facebook is also becoming a streaming competition or competitor to Zoom as well. You never know. So I look at stuff like that too. But you know what, they would have been a great investment 2020 hindsight, knowing that everyone has to stay at home and grab videos and every company and job is using Zoom, using your common sense. Yes, that was a perfect investment. But that's why you shouldn't always just choose companies you like, because you never know what this company is going through, or if they're losing profits, or if they'll be able to ever return to that profit. So you always want to think of a company that will keep either innovating or getting more money. You know what I'm saying? So you got to ask yourself that too. Will this company get me some more money? And are they at a significant drop from their 52-week high? Let's go look at a company that I would invest in. So let's look at um should we look at Apple's product, or Amazon? All right. So Amazon, are they profitable? We already know they are. Oh, also you can go to and use this tool because you gotta go look at their competitors. So look at this Zoom before we even get into the next stock. Let's look at Zoom real quick. All right, so this is another fundamental analysis thing you can use. So look at this. It's telling you Zoom videos competitors, Microsoft, Cisco, Autodesk, Trade Desk, things like that. They are profitable. So looking at this chart, this is their revenue. This is how much it costs to make that. This is gross profit, and these are other expenses, which could be employee costs, whatever other costs they got to do, server costs, things like that. And this could just be basic costs. You know what I mean? So they literally net this, which is almost $1 billion. That's net, right? And that is from literally the last 12 months. So that's pretty good, right? And if you look, let's go look at their financials. You see that 990.1 right here. So, yep, the last 12 months, that's what they've been profiting. And you can see it right here, that 990.1, and you can see it right here, 990.1. That's what they've been profiting, right? And they have competitors, and then they even give you the valuation. So this one you can easily see if somebody is profitable right here, because we can go look at snaps after this, and you'll see a totally different thing going on. Like Snap is another great example. So this one says they even give you whether they believe it's undervalued based on all these metrics they have, and these guys are usually correct. I can't even lie. Since looking at this thing. Now, don't get me wrong, you don't want to just go by this. You want to look at the chart, make sure it's at an extreme dip, all of that stuff. You always buying at a dip, by the way, always, always. So see how this is Amazon's 52-week high? You want it to be a significant drop from there. So now we have what? It went down to the 80s, $100 drop from Amazon to right here. Who wouldn't invest in that? Amazon was almost what? At 85, it was at $85 at one point in time. You're supposed to buy that. Amazon on a dip, and I even told people to buy that. It was at 186, $100 down. You have to buy Amazon, correct? So this is a great stock. It gives you a bunch of metrics that we could talk about. It gives you the assets over liabilities. It's another chart that shows what type of, and here goes their balance sheet. So Zoom doesn't have a bad balance sheet. They are profitable, and they possibly could make a comeback, but they took a beating because the revenue decreased since COVID. So we got to talk about that. Let's look at Snapchat. Snapchat is a company. Oh, well, we got to do this on Snap. So think about it. You might like Snapchat, but is Snapchat a great company to invest in? Probably not. So look at that. Snapchat is literally losing 1.1 billion. Look at that. Revenue, cost of revenue, gross profit, all of that, right? Data, revenue, cost of revenue. It literally, you can see it with this graph right here. They have a net margin of literally negative 24%. Snapchat is not profitable, but you would not know that, would you? If you were looking at them, you would say, this is an app. They are definitely profitable. Those guys are, killing it, right? And these guys are in the hole, struggling, might have to sell their company, everything, right? Snapchat. See that? Current price at $11, but they feel like it's literally undervalued based on what Snap could possibly do in the future. Now, you never know what a company could do. Let's just say you hold on, you buy at $11, and then Snap just either comes out with the best thing or spend their last dollars on a small company that just takes off, right? Things could happen. Stranger things could happen. I'm telling you. Yeah, Snap is not doing good. Let's go look at their competition. Their competitors are Weibo, Twitter, Pinterest, Meta, right? So, Snap is losing it as a company. So, like I said, just because you like a company doesn't mean they're right for you. And we can go and look at Snap's balance sheet to go see if they're even if they're net profitable. Remember what I was telling y'all, right? Here we go. This one, net, whether they are net profitable. And you want to see them increasing or stabilizing, stable or increasing. Financials for Snap. So Snap, let's look at Snap year over year. This is just an easy way to tell somebody's profit. 2018 lost a billion because you got to add 3 more zeros to that. So a billion. So add 3 more zeros after that because it says all numbers are in thousands. Another billion loss, close to a billion. And then so this is the point where you start to think, is Snapchat getting it together? So here's where people start to look into buying opportunities as well. When they see that even though you're losing less and less. So could you turn a profitability? Let's go look at quarterly. So if I'm not mistaken, Snapchat had its first profitable quarter in a long time. This quarter right here, the last quarter of 2021, they had their first profitable quarter and they jumped because everyone was surprised. They had their first profitable quarter and then lost it, and then lost it, and then lost some more, right? 350 M's, 422 M's, all that. M's down the drain. So are they a good company to invest in long term? The short answer is no. The long answer is, like I said, you never know what a man can do with his last dime. But the short answer is no. All right. Based on just simple metrics of looking at their net profitability. And then of course you have cash flow statements. The last 12 months, they have some cash, not much. 137 M's last 12 months. Literally this same quarter, they had some cash during year over year. So last year wasn't that bad for Snap quarterly. And I remember guys telling me, so Last quarter, they were positive with free cash flow. Um, positive, 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 negative during this quarter. So looks like the last 12 months, they're getting some profitable free cash flow. So yeah, you got to look at that too. You know, are they cash flow positive? Do they have enough cash to make other investments? And that's all cash flow is. Investing cash flow, financing in cash position, operating cash flow, all of that, right? So they're negative in investments, financing cash flow, positive in cash flow, and then all of these metrics equal out to this one, right? So this is your free cash flow. All right.